All right, guys, we are on to new material. And this material here is heavily tested on the CPA exam. Okay. And the main reason it's tested is you're going to see that the basis of accounting shifts some in depending on the fund that you're dealing with state and local government accounting. Okay. So it's important to recognize we're not dealing with federal accounting or federal government accounting. That isn't tested at all on the CPA exam, but we're focused on state and local governments. Okay. This is a different governing body issues the accounting standards for this. So the Governmental Accounting Standards Board. So we're switching over from the Financial Accounting Standards Board that did not-for-profit accounting and for-profit accounting. And now we're the Governmental Accounting Standards Board, state and that does accounting standards for state and local government. Now, I mainly teach this material. My primary focus is that when you see these problems on the CPA exam, that you are excited, confident, that you ace every single question on the exam. Actually, some of you in the class have more experience with the actual practical side of governmental accounting. So hopefully you'll share with me and talk to me about that, because that is not, I don't have experience in that area. I haven't worked in governmental accounting. And so kind of to get insights from that would be wonderful. So hopefully you'll share those things in our conversations and stuff. Okay. All right. So, a government exists for the benefit of the citizens, right? It does not exist to generate a profit. Like we don't have a number net income on our financial statements that drive efficiency. And so the accounting is different because we don't have that net income type number. Instead, we are primarily looking at, hey, how was this money intended to be spent? Was it actually spent? How is it supposed to be spent? Okay. As far as stakeholders go, taxpayers, which are also citizens, elected representatives, oversight groups, bondholders, financial institutions, just anyone who is interested in the health and the goods and services that a government provides. As far as revenue, it's primarily generated through involuntary taxes. We don't have a choice. We're required to pay our taxes instead of exchange transactions. You will see there are some exchange transactions within a government, but they are in a specific area within the government. And then, we're really trying to monitor compliance and follow public policy. Okay. Therefore, accountability is the cornerstone of financial reporting for governmental accounting. The government exists to serve the population, and as a population, we're required to pay taxes. Therefore, we want to make sure that the government reporting is providing accountability for what the government's doing. Interperiod equity is an additional important concept that we want to keep in mind with state and local governments. So this concept is essentially what is paid in the current period should benefit the people who are currently providing those resources. And so if we are providing resources or goods to the population and the current population isn't paying for them, that would be a violation of interperiod equity. So it'd be like our kids and our grandkids paying for things that we're resources that we're consuming today. So that'd be a violation. We don't want that. And so that's an important thing to keep in mind. Now you may say like, well, what about if a government issues bonds to build a new schoolhouse or whatever building? Well, if you think about that, the bonds will be paid over a period of time, however long, and that should also be the useful life of the building over that period of time. And so that isn't a violation of interperiod equity. All right, so it's important. We have two broad categories of financial statements. One is related to our fund financial statements. That's focused in on fiscal accountability. So are we spending the money in the current period how we're supposed to be spending it? Or are we not spending, like, are we spending money within our budget, stuff like that? Then government-wide financial statements have been added in, and basically this is much more similar to our for-profit accounting. Government-wide financial statements, they are economic resource measurement focus. So not just looking at current resource measurement focus, but actual economic measurement focus. So it's like anything that impacts the economic entity, the government as a whole, we are wanting to record that. Operational accountability is more broad than fiscal accountability. Fiscal accountability is focused in on the current period and current resources, how they're being consumed. Operational accountability is more wide or broad. So extent to which the government has met its operating objectives efficiently and effectively, and the extent to which it can continue to meet its objectives for the future. So we're going to record capital assets and long-term debt in our governmental funds. So there are different types of fund accounting. I'll get into it in a second, but in our governmental funds, we don't record capital assets or long-term liabilities. In our government-wide financial statements, we do. Okay, so it's interesting that our textbook, the way it shows it right now, or the way it's been set up, is it'll do journal entries for the governmental funds or the fund financial statements, and then it'll do an additional journal entry, a second journal entry for the same transaction, but it's for government-wide financial statements. So two sets of transactions. It's called the dual track approach. Many governments will just do, I mean, you can correct me on this if this is different, but back when I learned this material, they'll just focus on fund financial statements first, and then at the end of the year, they'll do reconciliation. This textbook only covers that in an appendix, but the CPA exam covers it more, those reconciliations between the fund financial statements and the government-wide financial statements. Okay, so think about fund accounting more like specific checkbooks, or so like you'd have a different checkbook per purpose of the government, or you could think of it kind of like Dave Ramsey's envelope system, where you have an envelope for car payments, or an envelope for health insurance or whatever, or an envelope for entertainment. That's kind of what we have with our fund accounting. Okay, and this is in accordance. So we create these funds in accordance with law, and it's make sure we spend money where we're supposed to spend it. Different funds can have different set of accounting, like a different accounting basis, and that's super heavily tested. In fact, the material from this PowerPoint just this PowerPoint, it covers a huge percentage of what is covered in the CPA exam for this material. Now we'll cover it a lot more and get into deeper into it. But really, if you can understand this material here, it's really critical. It's tested a ton. Okay. So we have three main generic fund groups. Okay. So we have governmental funds, proprietary funds, and fiduciary funds. Okay. So just to kind of keep these straight, and it's important that you keep governmental funds, keep that separate from your government-wide financial statements. Okay. Two very, very separate things, different basis of accounting, different measurement focus, all that. So yeah, so governmental funds, we'll talk about that in just a second. Proprietary funds, think of, so this first little bit, this proprietary, it has the same root as like proprietorship or sole proprietorship. So think of this as like your business type activities. Okay. Anyways. Okay. So your business type activities. So this is actually more like your exchange type transactions. So proprietary funds, business type activities would be like the utilities that a government offers, or if the local town has a water park, you pay to go to the water park, or you pay for membership to the water park or something like that. And then fiduciary. So with proprietary funds, the money people pay for that specific good or service, and it covers the majority or some of the costs of that service. Doesn't have to cover all of it, but covers the majority of it. And then fiduciary, think of fiduciaries. They are institutions or people who manage money for, or who are responsible to manage money for someone else. Okay. So with fiduciary funds, always think to yourself, remind yourself, not our money. Okay. So this is someone else's money, and we've just received it for some reason, and then we'll pass it on to whoever it belongs to. Okay. All right. So this one here, this is critical. Our governmental funds. This is tested like crazy. Okay. So governmental funds, the basis of accounting that they use is modified accrual accounting. Okay. Up to this point in this class and all your other financial accounting classes, we're using full accrual accounting. Okay. So we were recognizing revenue when it's earned, and we were recognizing expenses when they're incurred, or systematically over the useful life of an asset. Okay. So that's full accrual accounting. This is modified accrual accounting. And I'm telling you, it's tested a lot. Okay. So our revenue is going to be recognized, and important that you memorize this, when measurable and available. Okay. So measurable makes sense. Available, sometimes students struggle with this, but the concept of available is that we believe we're going to receive it within the current year plus 60 days. And that's kind of your typical rules for availability. Measurable is, we know with some level of certainty how much it's going to be. So that's when we recognize revenue. Instead of using the word expense with governmental funds, always use the word expenditure. Okay. Before this point, those two words were kind of used interchangeably, but make sure as you're preparing for the CPA exam that you always keep this separate. So if we're talking about governmental funds, always use the word expenditure. If the question uses the word expenditure, then you know that it's dealing with governmental funds. Okay. If it uses expense, know that it's talking about full accrual accounting. Okay. Within the governmental funds, we do not carry fixed assets. So you'll never have a debit to a fixed asset or a credit to a long-term liability. Okay. Instead, we record because these governmental funds use the current right here, current financial resource measurement focus. We do not carry fixed assets or long-term debt, and so instead you debit expenditure, even if you're buying a police car or a building, something that's going to have a long lived life. It doesn't matter. You still record it as an expenditure, and when we credit, if we borrow money, we don't record it as a note payable or something like that. Instead, we record it as another financing source. Okay. The financial statements for our governmental funds are statement of revenues, expenditures. So that can remind you like, oh yeah, this is obviously governmental funds, and changes in fund balance, and then balance sheet. And then we reconcile between our governmental fund financial statements and our government-wide financial statements. And so that's also required is reconciliation statements. Okay. So the types of governmental funds, and you've got to have this down somehow. You got to figure out how to remember this. Okay. There are the potential to have these 5 different categories of funds, these fund types. Okay. The general fund is the only one that is required. You always have to have the general fund. Okay. Think of that as like the general in the army. You have to have it. It covers, and you can only have one too. You can't have more than one general fund. So only one general fund. You have to have it, and it covers just the basics of the business, ordinary operations. Okay. If something isn't accounted for in one of the other funds, then it'd be accounted for in the general fund. All right. Debt service fund. Okay. Now I just told you in this slide over here that we don't carry long-term debt. So don't think of the debt service fund as actually carrying the long-term debt. Instead, just think of it as where we put our resources. We set them aside in order to make principal and interest payments. Okay. So we put the money into the debt service fund, and then we pay a principal payment if we're reducing the principal, or if we're just paying interest on the debt, then we put it in there to pay the interest expenditure. So that's what our debt service fund is. We would set it up if we have debt service payments that we need to make. Permanent fund just means that some principal amount has been set aside permanently, and we're legally restricted to use the income from that principal. Okay, so we don't spend the principal. We just spend the money that's generated from the principal. Special revenue funds. This is when we levy a tax for a specific purpose that is not a capital project. Okay. So think of like if you stay at a hotel, oftentimes there are additional taxes for that hotel stay, and those taxes are restricted to pay for tourism board or promotional things for the city. So that would be accounted for in a special revenue fund. Or your fuel tax, as long as it's not to actually build new roads, but if it's used to maintain the roads, then that would be an example of a tax that would be accounted for in the special revenue fund. And then capital projects fund. Now this one, again, you say, wait a second, we don't carry fixed assets or capital assets. Well, what we do is we may be building something. So let's say we're building a library in the community. We would just set aside money for that construction project and then spend the money out of that fund until the project was until the project is done. Once the project is done, then we zero out the fund and we don't have it anymore. So the capital projects fund is specifically for a capital project that's going on. It's not to actually keep track of the actual fixed asset. Okay. Proprietary funds. Remember what I said on these is these are business type activities. Okay. So here we're using modified accrual, current resource measurement focus. These governmental funds, that's the only ones that use that other, I guess, different basis of accounting. Okay. And everything else, so your government-wide financial statements, your proprietary funds, and your fiduciary funds all use full accrual accounting and economic resource measurement focus. They carry fixed assets, they carry long-term debt, all of that. Just like normal. Okay. And so you'll see they test this material, but they mainly test it to see if you actually know this governmental material, if you know the difference between the governmental funds and proprietary funds or fiduciary funds. So, sorry, getting distracted with my computer. Okay, so we have two different types of proprietary funds. We have internal service. So these are business type activities, right? So they're most of the time they're exchange transactions, and two different types of funds, two different broad categories. So internal service fund, enterprise fund. Let's talk about the enterprise fund first. So the enterprise fund is going to be providing goods and services to the public as a whole. Okay, I kind of already talked about this, huh? Like utilities or water park or something like that. That's our enterprise funds. Our internal service fund is goods or services provided from one department to another department within the same government. Okay, so here at Truman, we have a printing department. And when the School of Business and Professional Studies needs posters printed, they send over the order to that other department, printing department, and then they charge the School of Business a fee to do that printing. And so that's specifically what our internal service funds are. So basically, to know the difference between the two, you ask yourself, like, okay, is this covering like the citizens of the government, or is it covering like within the government? And that's how you know between the two. Internal is within, enterprise is the citizens. Okay. So we're so a lot of times if we're borrowing money to build something like a water park, then that debt is secured by the fee revenue from the water park. Or we have to collect adequate fees to recover the costs of the staff or whoever the lifeguards that work at the water park. Okay, fiduciary funds. Remember, this is money that isn't the government. So the fiduciary funds, this is not going to show up on the government-wide financial statements. Okay, not government. So it's not going to show up on those financial statements. Okay, this other information will. Okay, fiduciary funds, what happens here won't, because we're just acting as a custodian or a trust of these assets, and then we're going to pass it on to the owners. Okay, so again, now full accrual accounting, economic resource measurement focus, carry fixed asset, long-term debt. Okay, so the different types of fiduciary funds are custodial funds. And so we're just like collecting taxes. So think about, you pay property taxes to the county, or oftentimes you pay as you pay your mortgage into an escrow account. But anyways, that is paid to the county, and then the county distributes it up to other parties. So the money that's being distributed to other parties would be custodial. Pension trust fund. So governments still do have pensions, and so they're collecting money from their employees, or taking a portion of their salary and wages and putting it aside and investing it. And so that would be done through the pension trust fund. Private purpose trust fund is money that's been gathered for specific individuals or private organizations or other governments or something. Okay, and then investment trust funds. Governments, the inflow of money is somewhat or really quite seasonal, right? They receive property taxes at a certain time of the year, and so they need to put that money to work, generating additional income. But sometimes governments aren't big enough to do it on their own. So instead, they'll pull multiple governments together and create one trust fund. So any of our own money that's in the trust fund, investment trust fund, we account for it we still account for it in the general fund. Like if we're pulling money, like the debt service fund or capital projects fund, really. So anyways, but if it's our money, then it's accounted for in the underlying fund. Okay. But if it's a different government's money, then we account for it in the investment trust fund. Okay. So this just kind of breaks it down. So if you remember I kind of like it like this, GDP. So general, debt service, permanent, GDP, and then SC. That kind of helps me to remember it. Special revenue, capital projects, GDP, SC, and then proprietaries, IE, and then fiduciary, custodial, pension, private, investment trust. Okay, are your categories of funds. I think we're going to, this here, we've kind of already talked about this. We do use encumbrance accounting in our governmental funds. We use budgetary accounting in our governmental funds. And our budgetary accounting is actually adopted into our financial statements. So it's different than budgeting in like your cost accounting class or something like that. But other than that, I think we've covered. So this is specifically talking about governmental funds, so current financial resources. We've talked about that. And then these next two, budgetary accounting, journal entries, I'm going to do this in a different slide, actually. So I'm going to cover that in a different slide. Appreciate you guys watching. Don't hesitate to ask questions. I'm going to post some practice problems for this. So look for those. Thank you.